you want to do a large trade, you're not necessarily doing that on one blockchain. You would end up routing that across multiple blockchains so that you get the best execution. It's not just trading, it's also a bunch of other use cases, right? I mean, blockchain is always beyond what Wall Street is currently doing. So
Ram, I have known you for many years and admired you, from your deal career. I don't know if you remember deal career days. And you've had such a prolific career. I want to talk to you today. You've left all that and gone into crypto. Tell us about your decision and tell us what is so exciting with the crypto world and what you're doing specifically.
Thank you, Shradha. I guess you're probably one of the few people that actually remembers deal curry. So I'm touched by that. Crypto, I'd love to tell you it is a very deep planned decision or career move, but unfortunately, it's nothing like that. Just before this, I was in the investment banking space, and I was doing a lot of secondary deals. That would mean helping VCs get liquidity around late stage but pre-IPO companies. So I was creating these SPVs of Uber and Alibaba and Flipkart and Airbnb and all these names, and putting them into funky vehicles and funky islands and getting investors from another part of the world to come in and invest. And as I was doing that, and given I guess I had at some point I'd also been a product guy, technology, building things. There's a bee in my bonnet, which told me, instead of trying to sell somebody a $2 or $3 million worth of Uber every few months, why don't I just tokenize this thing and give everybody the ability to buy a $10 worth of an Uber or Airbnb or a Flipkart, right? So that's when I sort of stumbled into blockchain. It was 2014 or 15. And from there, I sort of raised some capital from a few investors in India and Singapore and the US, and built a solution on the blockchain. This was pre-Ethereum, so tokenization wasn't really a thing. And so that's literally almost stumbled into the rabbit hole, as a lot of folks in crypto will tell you. It's called falling down the rabbit hole. That's the operative word.
Tell us about the journey from 2015 to now, because you would have had such an early view to this whole space. And how have you seen the space evolve? And then we'll come to your startup.
Yeah, absolutely. So, 2015, it was very much a bit of a cult thing. A lot of some folks knew about it. A lot of folks did not know about it, but or had the wrong perception about it. But that's still the case a lot. Actually, nothing much has changed that way. But we've seen probably 3 cycles post that. There was a big 2017-18 boom bust cycle, and then before that there was a 14-15 crash, which I sort of did not. I missed that, but I entered off to late 2014, early 2015. It's been interesting, right? Initially, we were building crypto, as is the DNA. I started off with some crypto research and analysis, and then ended up doing some crypto investment advisory for a lot of family offices, etc. And then started building products. We built a very interesting product, a crypto index token, way back in 2017. And we actually had a large Indian stock exchange come in as a partner. And before we were about to go live, the RBI ruling came in literally 2 days before the big announcement, right? So the timing was a bit off. But then we've been continuously building through the winter, through the spring, through the summer. That's one of the common themes that you'll see in a lot of the people who are still in crypto. So yeah, we've built a lot of products, right? So the keep building. So we built exchanges, we built index investment products, we built arbitrage trading bots. I can, and there's so many things that come up. Sometimes the product is great, but the market timing is wrong. Sometimes the market is great, but the product market fit doesn't come, right? So, as they say about entrepreneurship, right? You got to keep trying, and then finally something clicks, and then, yeah, that's about it.
But something has clicked phenomenally well with Router. So tell us about Router. How did you pick this problem, and also what's your vision with Router?
Yeah, absolutely. So, actually, what is really workable is Dfyn. Router is hopefully something that, as you can imagine, as this whole blockchains came about, Ethereum came in with a big bang, right? And the promise of Ethereum was a scriptable supercomputer. It is far more easier to play around in the code and create smart contracts in Ethereum and as opposed to Bitcoin, right? So we have this divergence of narratives with Bitcoin being a store of value, Gold 2.0, and Ethereum being more of a scriptable supercomputer that's better for smart contracts and things like that. With Ethereum, because of its popularity, it became more a medium of speculation initially, right? So you have a situation where you have gas costs going up, you have congestion going up, and Ethereum is still not even 100th as fast as Visa or MasterCard or any of those interesting mainstream products that we used to, right? Just give me 1 second. I'm going to. There's a speck on my glass. I hope you guys edit this out later. Sorry. Yeah. So no, Ethereum was it became too popular for its own good, right? So a lot of folks started building what are known as layer 2 blockchains, and also started attempts to scale Ethereum. An analogy from real estate would be, cities like New York and London and Bombay come up, right? And then you have New Bombay and Milton Keynes and New Jersey and Jersey City also coming up, right? And there's a reason for that, right? I mean, the original cities are very congested. It's very attractive, but it's also super pricey. So a lot of folks are saying, you know what, I'm going to pay half the price, but I'm going to move slightly further away. So that's happening in the blockchain space as well. So what you see now is a lot of interesting Ethereum competitors as well as Ethereum complementarities, I would say, folks that are complementary to Ethereum coming up, and their intent is to sort of either pull away some of the transactions from the Ethereum network or find a way for transactions on the Ethereum network to sort of execute it or settle faster, right? So you see that fragmentation in the blockchains, if you will. So it's from that aspect that router and Dfyn become interesting. When you have a lot of cities, you need bridges and tunnels and roads and highways, etc., for these cities to sort of communicate and move people and ideas between these venues. So the idea behind router is pretty much that, which is to help liquidity move from chain to chain in a seamless manner. And what has really worked well that you alluded to earlier actually is Dfyn. Dfyn is a decentralized exchange that we launched on Polygon recently. As Polygon, as you know, is another big success story out of this part of the world, Singapore, India, in the last few months. And based on Polygon and based on another product called Uniswap that has done very well on Ethereum, we created something called Dfyn, which is a decentralized exchange. And then I'll come to what decentralized exchanges are and why they're interesting later on. There's a lot to talk about. But Dfyn has worked well because Dfyn is a great way for folks to do the same thing that they will do in Ethereum, but they can do this in Polygon at a far cheaper cost, almost zero cost, and at much faster, basically. So that's why, and you'll see a lot of that going forward. There's a lot of build up on Polygon. There are other projects like this coming up, and there are other chains like Polygon that wants projects like Dfyn, etc., to set up nodes on their chains, and you have this router infra which is connecting all these chains, blockchains.
So I heard that Dfyn, when it launched with a bang, and it did very, very well, and it is doing very well. Tell us, what are some of the things that led to that?
A lot of it is market timing and just product market fit, which we sort of stumbled into, right? I mean, we had launched Dfyn a few months ago, and thankfully, when we did the IDO, the initial DEX offering, if you will, it just so happened that Polygon was also seeing a lot of traction because of partnerships they were having, and Ethereum congestion was peaking. In fact, the day of the IDO, the initial DEX offering, people were spending $800 in Ethereum gas costs to buy $300 worth of Dfyn, right? It is that crazy. And in retrospect, it worked out well because that $300 became $3,000 or 300,000. No, actually, it did almost 100x. So 300
wow.
times.
You should have told all of us about that.
I should have known, and I should have bought some more of my own, our own IDO, right? But yeah, it was crazy. It was basically good product market fit, good market timing, and a bunch of things sort of right space, right time. Yeah.
So Ram, if I understand, and this is for all of us who are not from this world, what you're saying is that router lets you be on different platforms, right? Be it Polygon or others. So you
That's right.
can through and you can process your liquidity through router, and find is an exchange, and this also can be present anywhere.
That's right. That's right. It's like, you have let me use a Bombay analogy again. You have a really cool restaurant on this side of the ceiling on the Worli sea face, right? So you have a defined node there. And you have a defined node in Bandra. And router is the ceiling that lets you get quickly between these two venues. And a lot of people would want to do that in the blockchain space because there's a lot of stuff happening in all these venues at any given point. And then the beauty of router is, the ceiling is not just for the users of a particular restaurant or venue, or it can be used by everybody, right? So it's going to be open source and anybody can use it. But we just hope that, because we have our venues on both sides, some people come to our venue. That's, I guess, the right analogy.
The most success you will find, because these are such initial days for the whole crypto blockchain world, there'll be more people like we see in other tech and other startups. Like, once you see success, a lot of people follow. What will give you that unique advantage, or what will hold you ahead?
It's probably the most critical question that a lot of folks in the blockchain, and you see that because, if you look at the top 10 currencies in coin market cap, or crypto compare, or crypto CoinGecko, and these are basically like finance.yahoo.com for crypto. You see the top 10 coins from 2014 and compare that with 2016 and 2018. We don't see Bitcoin at the top, but the other 9 names, okay, Ethereum these days is number 2, right? But the other 9 names, 8 names, keep changing, right? And that's testament to what you just said, which is that success in crypto is especially transient, especially ephemeral. And before you know it, there's a competitor that comes in and builds community and takes out all your community, right? So, but having said that, I think the only way to do this is continuously be learning, continuously be adapting to the market, and just listen to the community. I mean, even more than anything else, crypto is, you got to be innovating on your product cycles far more aggressively, because in crypto you're running a public company from the get-go with all your IP out there, and all your community is in a Telegram group yelling at you 24/7, right? I need to see this feature, or this particular feature is not working. It's a crazy ride, let me put it that way. So you've got to be continuously innovating, and as cliche as it sounds, that's the only way out.
Now tell us about your team. Are you expanding your team in Router? How are you building the company, if I may ask?
No, absolutely. So we were 2 last August, 3 actually, and now we are closer to 20. We're spread across Singapore, India, and very soon in Japan. We're expanding. We're hiring people in engineering, in technology, in product development and marketing. So we're hiring. I mean, we're hiring, growing, as with most companies in the crypto space. Yeah, absolutely.
And tell me something, now that we are in pandemic and there's this whole thing about remote working and working from anywhere. Do you think that there is something about this segment or this sector which makes it intrinsically easier to work from anywhere?
Yeah, I think the answer lies. I think the way you sort of formulated the question, there's the answer right there. You're absolutely right. Just with crypto, what I've seen actually last 1 year has been one of the most productive for me. Because typically, what happens is before the lockdown, you have at least 2-3 conferences every quarter. Consensus in New York, and then something in Singapore, and something in some other part of the world. And you spend a lot of time traveling, and then you have other meetings with the team across Singapore, India, so on and so forth. With the lockdown, paradoxically, a lot of us in the crypto community have had a productive year, primarily because there's no excuse to travel. There's no means to travel. So you're just sitting in front of your computers and building, right? Getting on Zoom calls and Google Meets. And I think it lends itself naturally to that, right? It's a lot of teams don't even see each other for a long time, but just get together and build. So it's been good.
I've heard that you have also crossed the unicorn mark in the crypto world. Is it true?
It's such a, I'd love to say yes, and the thing is, it's a very specific metric called fully diluted value. It's a bit of a spurious measure. In crypto, what happens is there's 2 metrics. One is the fully diluted valuation, and then there's a circulating market cap, right? So if you take the fully diluted valuation, potentially we're a unicorn, but I mean, it doesn't really count for much in crypto. It's not as big as it is in the traditional startup space. But it's good to sort of call ourselves an FDB unicorn.
And have you raised capital for this,
Yes,
for Find and for Router?
Yes. For Router, we raised a small amount from a few investors. For Dfyn, we raised a slightly larger amount from some large investors in this space from the US and from here in Singapore and overall in China and Hong Kong and so on and so forth. Yeah.
I honestly really look up to you, and I know the pedigree that you come from. At the core of it, you are an analyst, and you are a guy who goes deep into any subject. So now you have to decode this subject for us. We know it at a surface level, what blockchain is, what crypto world is, and what is happening. But if you had to say to people who are learning about it for the first time, what would you say? Why is this exciting? And why should everyone follow and look at this space closely?
Got it. I'm going to just regurgitate a lot of reading that I've done of,
And you've lived this space for the last so many years now.
Yeah, absolutely. So there's a great author called Andreas Antonopoulos that a lot of us in crypto look up to. So I would say, if you read his works or listen to his YouTube videos, you probably get everything. And that's how I've learned, right, when I first got into crypto. But effectively, there are a couple of paradigms that make sense. The whole thing is around decentralized consensus, right? Imagine in the modern economic system, there's always a third party that whether you're using a website or a delivery provider, whether it be your Amazon or your Chase Manhattan or whatever, right? So the whole, if I were to send you money, right, I would tell the bank to debit from my account and credit your account, right? So fundamentally, all the bank is doing is using a register to sort of make that entry. There's no fundamental transfer of, I'm not really coming to your house and giving you, I could do that, but that's not how it happens mostly, right? So the thinking behind crypto was, I guess, in 2009 when Satoshi Nakamoto started, sort of wrote that famous paper. And actually, this proof of work consensus actually predates him. In the 90s, I think it started for use cases like preventing spam and so on and so forth. So the idea behind the decentralized consensus is, why should we have third parties who are supposedly the enforcers of trust, but actually they're rent-seeking agents, like for the pleasure of holding our bank account or just enabling money transfer or whatever, or the convenience of holding our cash. The banks charge us fees, right? And same way, if you're looking at what's happening in the data space, if you look at Facebook, Twitter, etc. I mean, you think the data is free, but it comes at a cost. There's a loss of privacy and so on and so forth, right? So the whole philosophy behind crypto is, I guess, the Valley libertarian philosophy, and there's some cool Austrian economists that keep getting quoted. I mean, the idea is, it's about decentralized consensus. If a lot of people believe that something has value, and if a group of people can collectively come together and establish consensus, you don't need one single third party, right? Which could actually be a point of failure. I mean, you've seen banks failing, you've seen airlines failing, you've seen any number of companies failing, right? So that's the fundamental motivation behind crypto, right? You have, and this happened right after the 2008-2009 financial crisis, right? When you had the whole Western financial system sort of collapse after the Lehman blow up. And so it was topical, it was thematic, it sort of fed into the angst of those times, if you will. And in fact, the first Bitcoin transaction actually encoded sort of a headline from the then Bank of England governor, Mervyn King, who was announcing a big bailout for the, I think, for the European economy at that point in time, right? So that's the broad underpinning, if you will, and why is it interesting, right? I mean, it's now something which is Bitcoin. I mean, let's talk about Bitcoin. Right? Bitcoin is the big elephant in the room if you talk about crypto. So Bitcoin is just established itself as a goal 2.2. Right? I mean, you'll see that folks sort of, there's a lot of pretty human out here, I don't know why. So Bitcoin has completely established itself as a store of value. Right? I mean, the value might go up, the value might go down, but it's basically gold 2.0, right? You cannot, unlike gold, you don't need to carry it around. You don't need to bury this deep in some underground bunkers. And you don't have the threat of Elon Musk finding a gold deposit somewhere in Mars or some other godforsaken planet in a few years, right? So it's literally a scarce commodity, and it's a deflationary commodity, right? Because unlike traditional banking and monetary systems where the dollar or the rupee or the SGD, there are always pressures and political incentives and other factors that will contribute to something like this being inflated away. Whereas a Bitcoin is a deflationary store of value. So that's why Bitcoin is so powerful. I mean, if you talk to folks, Ethereum, definitely, I mean, there are two camps here, right? There's a Bitcoin maximalist and there's this Ethereum maximalist, if you will. I mean, I'm sort of torn. I think both have a space, right? You need Bitcoin as a store of value. You need Ethereum for all its supercomputing powers, its scriptability, if you will, right? And the other philosophy that's interesting with blockchains is that, it's not forcing you into any one belief system, right? Whenever you have political systems, religious systems, or whatever that sort of try to force you into, and then religion, politics, and all are very topical these days, right? Whenever they try to force something onto you, there's a natural reaction, right? With the blockchains, it's not like that, right? I mean, you can write your own blockchain. You can get folks to sort of validate those nodes if you're using a proof of work or whatever, right? And if you don't like a blockchain, you can fork it, right? And then you can do your own thing there. So it's sort of it's not a zero-sum game. It's an expanding pie. And then the use cases are limitless. Right? That's why it sort of captures folks' imagination in a way nothing else has, right? I mean, typically in traditional Wall Street, is a zero-sum game. You're a trader in Goldman, you're a trader in Morgan. When you're trading against each other, you're not creating value collectively. And whereas if you and I are both, creating a blockchain token together, and even if we might be competitors, it might be that if we collaborate and the token value grows, right, both of us benefit, right? So that's I guess the beauty of one of the other things that makes blockchain very interesting.
Ram, I want to ask you this question: that any currency or any mode of transaction has worked because people believe in it. There's belief in it, right? Gold works. Gold is gold because the world believed in it, yeah. And money works because world believes and the government believes in it, and that has become the way of transaction. Today, blockchain is also a belief, a sort of belief that the world is believing. From your lens, if you have to say that, what brings efficiency and trust to this? Not trust, but what brings rationality? Is there a rationality to this belief?
A lot of these questions sort of tend to veer into a philosophical discussion, right? Which is, what makes you believe that the US dollar or the INR has value, right? What makes you believe that a government cannot overnight decide to ban rupee notes, right? Or what makes you believe that the US Fed won't print more dollars, another $1 trillion in the next few weeks, right? So ultimately, it's consensus reality, right? Ultimately, reality is what we arrive at in a consensus fashion. And it has been proven that the consensus mechanism underpinning Bitcoin has been working for the last, I guess, 12, 13 years now, right? And it's growing from strength to strength. It's every day that Bitcoin survives makes it grow stronger, right? So from a technical perspective as well, that consensus holds, right? From a philosophical perspective, you can see the market adoption, right? You have early on, it was very much crypto, sort of all this Silk Route and all this cyber punk phenomenon. Increasingly, the large institutions started getting into it, and then now you have even folks like Carl Icahn, and you have all the big Wall Street institutions, Goldman. So you have. We say in the crypto community, there's a guy who said, first one of the Mahatma Gandhi quotes, right, which is, first they ridicule you, and then they sort of attack you, and then they sort of want to be with you, or so something like that, right? But yeah. So
and then they follow you.
And then they follow you. That's right. That's right. So we have seen a bit of that with crypto and Bitcoin and blockchain. Right? I mean, 5 years ago, I had to explain what Bitcoin was to even my former boss in the bank that I used to work for. These days, my mom calls up and says, "Hey, listen, should I buy some Bitcoin? Now, should I buy some Bitcoin?" So that that comes full swing. So I think to answer your question in a roundabout fashion, anecdotally and just empirically, that consensus is holding. People are believing in Bitcoin. It's an asset class that's here to stay. It's going to be volatile. It's going to be volatile as with most asset classes, if you look at the dot-com era between 95 to even 2005, right? And there was a big crash in 2001, 2002. But what happened in the crash was that all the investments that went in till 2000 is what enabled Web 2 and Google and Facebook and all those companies to actually come out of that detritus, if you will, right? So I think you see the same pattern over and over again.
Yeah, and now I want to ask a question on behalf of everyone who will watch this. Not everyone, but many who will have this question. That okay, we are late into this. What would you say to newbies? How do you enter this space, and what should they be doing?
I think that the opportunities. I think ZZ of Binance, another crypto legend, he said it well, right? The opportunities ahead of you are far, far greater than the opportunities behind you. Right? And I truly believe that in the crypto space. For all there's probably somebody working on a blockchain out there that is even bigger than Ethereum or potentially even Bitcoin. You never know, right? So it's about just being curious, being having the willingness to learn, and just spending some time in the community. And whether you're an investor or an entrepreneur, there's so much opportunity, because I think this is like, I would say, the mid 90s in the dot-com, the web era. And I think the next 20 years are going to be next 5, 10, 20 years are going to be where most of the action is, as more and more folks come in. And I don't get into price predictions, but I mean, there's a very good chance that Bitcoin and Ethereum and all these coins that you see are going to go 10x, 20x from here. And there are other coins that are going to come in that are going to be far more interesting in terms of their growth prospect, right? I mean, 1000x. And I there are folks that gone to crypto in 2018, 19 at the depth of winter. And a lot of them are sitting on many, many millions of dollars, because so it's never too late to get into crypto. And if you're an entrepreneur, I mean, I would say join a company. There's so many good companies with well-funded capital, a lot of capital in the bank. So join them, or this. If you're a good programmer, it's actually, there's never been an easier time to raise in crypto. I mean, if you're a good programmer, if you can get a friend to put together a small deck, it's so easy to raise, $500,000, $1 million, etc., and get off the ground to an idea. This is like the perfect spring in crypto.
But it also reminds me of the California gold rush, because suddenly the conversations are like, and there's this whole conversation ki paisa jaldi banega yahan pe aur bahut paisa banega. Do you what do you have to say? And you have been a trader yourself before in the other world. So
that's right. I think if somebody's coming and professing to be a saint, just run away from him, right? I mean, who doesn't like quick money? Who doesn't like to get rich quick? But you can't plan for it, right? I mean, if it happens, it happens. You got to love the field. You got to sort of come in and get your hands dirty and be willing to lose everything you have, right? I mean, everybody in crypto will tell you, especially those who've been through a few cycles, right? I mean, they've seen their life's work go down in a flash basis one Elon Musk tweet fraud, right? But then it'll come back, right? It's just a wave, So you need to have the ability to sort of understand, what you're getting into, and understand the inherent volatility of the space. And there's also the emotive aspect of it, and a lot of it is being amplified by social media and Twitter and Reddit and so on and so forth.
And also Elon Musk. Yeah.
And Elon Musk, exactly. But I mean, once you cut through all the clutter and try to understand what blockchain is about, what the particular project you're investing in is about, and whether you're investing in the infra space or whether you're investing in an application, just have a thesis, be sort of informed. I mean, it's just common sense, but you just need to spend the time, right? That's my take.
World over, the different governments are responding differently to crypto revolution, if I may say so, which is happening. And we're talking in a good week, because the RBI came up with a circular last week. And I want to understand, in India, there has been a lot of haziness when it comes to the space. What are some of the recommendations you would say to the stakeholders and all the stakeholders in the country for the movement to be big? Because, I was having conversation with Ramesh from India Tech, and they've come up with this report, and I'm sure you guys would have all discussed. And one of the things he was saying is that the market cap of startups across the world in the crypto space is $3 trillion right now. Right. And India might lose this pie if we don't get that support. What are some of the things that you think needs to be done for us to become
Right. Right. I mean, I actually wrote something for a newspaper on this exact topic a few years ago. And I had a lot of, let me try and recollect some of these things, right? In no particular order, do you want to be in a situation where your biggest competitor for the emerging global economy, our neighbor up north, China, they are pretty much a world leader in the space, in the whole distributed consensus space, right? And China owns 80% of, China plays host to 80% of the global Bitcoin mining power. Some of the really cool exchanges are from China. Some of the biggest exchanges are from China. And they're doing a lot of innovation around digital currencies, CBDCs, etc. Even though the headline news is that China bans crypto and so on and so forth. I mean, there's such a beautiful ambiguity in the way that system works, right? Innovation still flourishes, right? And even in India, maybe less so, but even earlier, I mean, companies succeed not because of the government, but in spite of the government, right? But these days, thankfully, it's much, much better. But with crypto, it's been a bit of a rough ride for most entrepreneurs, right? And what the government really needs to think about is, this is a game-changing piece of technology or movement or whatever you want to call it. And there's a ton of Indian talent, programming talent that sort of lends itself naturally. And if you look at the last 8 or 9 months, some of the most exciting companies in the DeFi space are either in India or Indian origin entrepreneurs in other parts of the world, right? So why do you want to lose that soft power and soft innovation that you have, right? And that's a no-brainer, right? And there are more prosaic, or geopolitical reasons, if you will, right? I mean, if you look at the stranglehold that the US has on the SWIFT economic system, right? So, and Iran was getting chucked out of the SWIFT system and they couldn't transact, they couldn't sell oil and they couldn't get the dollar back because, as you know, the oil trades are denominated in the US dollar. So, and you have issues like Twitter doing its own thing with the Indian government. So in such a situation, why would you turn a close eye to something like this? And why would you not foster innovation, right? And then even if you want to sort of build your own homegrown systems, right? You want to sort of be plugged into what the current consensus is, because the smartest development is happening in the open source GitHub repositories around Bitcoin and Ethereum and so on and so forth. So you cannot develop your own world-breaking technology in isolation, and especially when it's something like Bitcoin. And you want to be part of this because your competitors are doing it. There's geopolitical reasons to do it. You're not maximizing the inherent talent that you have, especially from a technical perspective. There's other prosaic reasons, right? I mean,
and then also so many people are today. There's so many Indians who are transacting, right? And
yes,
they are
yes,
transacting, and money is also going outside.
Yeah, absolutely. I mean, the best way to sort of really drive illicit activities to ban the damn thing. I mean, if you put a regulation around it, you know who is transacting what, who is sending US dollar to the US, right? I mean, if you ban it, the bad guys will still use it. They'll figure out even more interesting use cases for it. Whereas if it's a bit like the internet in the mid 90s, right? I mean, initially the government is worried about how drug traffickers and, money launderers and pornography and all those use cases was front and center. But it's like, you're banning automobiles because there's going to be some road accidents, or you're banning airlines because there's going to be that. This needs a lot of regulation, and it's these sort of, constructive, joint, self-policing as well. A lot of the Web3, the early stage internet issues around, illicit use cases or money laundering, etc., were addressed by the companies coming together to sort of address some of these issues, right? And in the same manner, I think even with crypto, I think what the governments need to do is engage the sector. And there are companies that already spend a lot of time in blockchain auditing and so on and so forth. I think that's the way forward, right? And the other interesting reason, again, this is, I don't know how it will work, but even if a lot of countries are buying up crypto for the sovereign wealth funds, right? They're figuring out that, there's actually a shift of power from the US dollar to other currencies, right? Now, when you want to move away from the US dollar, which currency do you go to, right? I mean, is it the Chinese RMB? Maybe, right? There's nothing else. But the most interesting thing that you want to have exposure to in such a scenario is Bitcoin, right? I mean, it's not owned by any government. Nobody can shut it down, right? And imagine if the Indian government buys a little bit of Bitcoin and then makes the news public. I mean, Bitcoin would go really high and it would wipe out half its deficit. And the first government that does that is sitting on a huge opportunity. It's a game theory thing. I don't know why some large government is not doing it. And I hear that, a lot of the governments in especially the tough governments in North Korea, Iran, Turkey, Syria, they're all buying up Bitcoin, right? So there are multiple reasons for the Indian government to engage. So let me put it that way.
If you could share with us next 1 or 2 years, how does it look like? What are some of the things? Of course, you're enjoying the process. I can see that. But what are some of the things that you're planning to do?
Right. Absolutely. So, we think that the multi-blockchain universe is here, fragmented. There's going to be multiple blockchains with fragmented liquidity. In such a scenario, the cross-chain infra bit is going to be super important. So in that aspect, you'll have solutions like router. There are a bunch of other solutions coming up in the broad space, right? And the best one will win. And so I think the plan is expand router into a bunch of blockchains, launch the mainnet, and expand Dfyn as a node on multiple blockchains and have that cross-chain use case going. And once you have, cross-chain use cases going, it's a beautiful thing because at the current moment, when you're in a traditional world, when you're a large asset manager, you're Wellington or Fidelity, and you want to sell 100,000 Apple shares, right? You call up your broker, Goldman or Hoover, and Goldman then executes it across 5 different exchanges, right? 5 different venues. I think that's going to be a reality in the blockchain space as well, where if you want to do a large trade, you're not necessarily doing that in one blockchain. You would end up routing that across multiple blockchains so that you get the best execution, right? And it's not just trading, it's also a bunch of other use cases, right? I mean, blockchain is always beyond what Wall Street is currently doing. So you have cross-chain lending, you have cross-chain governance, a ton of use cases that the whole cross-chain thing can enable.
With what you're doing and the space that you are in, if I had to ask you as a professional, as a person, what is it that is keeping you extremely excited? Because there's so many opportunities, but why is it that you are enjoying this and so committed to this?
No, I think when you're on the flow, you don't really analyze these things too much, to be honest. And you're just enjoying building the company. You sort of launching a product and sort of getting the market feedback. Sometimes it works, most times it doesn't work, right? And then I was listening to a speech by Sanjeev Bikhchandani, who's a legend in the Indian space, right? And he was talking about how right out of IMA in '89, he started a small company, right? And then very low tech. He would take a scooter, go to all these registries and make CDs and sell them, or and nothing worked. And then till 2000, 10 years later, when the whole .com thing came, Naukri.com became a phenomenal hit. And then till then, everybody was sort of cursing him, said, "Oh my God, what a genius!" So he said, "Listen, earlier you cursed me, great. Earlier now you're giving me plaudits, great, right?" So I think when you're a builder, you just enjoy the process. You don't really care about what others say. You're almost selfish in that way, right? You just have fun.
Yeah.
And I'm sure you know, right? I mean,
Yeah.
given your story days over the last 12, 13 years, right? I mean,
yeah.
Built.
Ram, thank you so much. We are going to continue having this conversation with you because everyone watching this will agree with me. It was very insightful. It was very holistic, wholesome conversation that we had with you. And we wish you all the very best for Router and Fine.